Interestingly, one price indicator associated with innovation is holding up, beginning to hold up, better than other prices, and that's Bitcoin. It's been interesting to see it flatline in the last month, while other indicators are reaching for new lows. Now, this is not surprising in the late stages of a bear market. In our experience, innovation starts to outperform in the late stages of a bear market. Why does that happen? It happens because innovation is the new leadership. Innovation solves problems. Innovation solves the kinds of problems we have today: supply chain, food, energy shortages, think the genomic revolution, electric vehicles, and so forth. And so we believe that innovation should outperform if we're toward the end of this bear market. If the Fed's close to pivoting, even in its rhetoric, I think we are.
It's no secret that Cathie Wood and her firm ARK Invests' innovation and growth-based investment style has been hammered over 2022 as the Fed continues to raise rates and tighten monetary policy in their fight against inflation. It's so bad, in fact, that ARK's flagship fund is down 64% year to date. However, in Cathie Wood's latest market update, she is certain that we are at the point in which it's darkest before the dawn and the Fed is going to be forced to pivot, leading to a huge bull run for innovation, growth, and crypto. Make sure to stick around to the end of the video where Cathie also speaks on how Bitcoin and crypto are holding up in this market environment and why their stability is an early signal of a changing tide. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind.
Markets are selling off across the board. That's very unusual. It's associated with crises, more convincing evidence to us that the Fed is too tight and that it will pivot. And when it does, it will do so, we think, significantly. Now, first, it might simply be rhetoric, because they always like to tee us up for what the next moves are going to be. And we haven't heard that rhetoric yet, despite all the evidence I just shared with you. But that evidence I just shared with you tells us that the Fed is going to get the message loudly and clearly somehow. And it may not be showing through in the numbers they want to see, but it will. It will. They are huge lagging indicators. They're basing policy on lagging indicators, not what they're supposed to be doing. Anyway, if you take, in the US alone, if you take equities and bonds and look at what's happened since the peak, you will see that the loss to investors is more than twice what we saw in 08-09. That's how bad this is. Because bonds are selling off with stocks this time. And one of the reasons for that is a seizing up of liquidity. As I mentioned, if people are facing margin calls or in financial difficulty, they're going to sell their most liquid asset. They will have no choice, especially with margin calls. Most liquid assets tend to be government bonds, and I think that's why we're seeing the backup in government bonds here, despite all of the deflationary signals in the pipeline. Interestingly, one price indicator associated with innovation is holding up, beginning to hold up, better than other prices, and that's Bitcoin. It's been interesting to see it flatline in the last month, while other indicators are reaching for new lows. Now, this is not surprising in the late stages of a bear market. In our experience, innovation starts to outperform in the late stages of a bear market. Why does that happen? It happens because innovation is the new leadership. Innovation solves problems. Innovation solves the kinds of problems we have today: supply chain, food, energy shortages, think the genomic revolution, electric vehicles, and so forth. And so we believe that innovation should outperform if we're toward the end of this bear market. If the Fed's close to pivoting, even in its rhetoric, I think we are. We are going to feature on a podcast or a webinar in the next few weeks Steve Vanelli, who is the CEO of Knowledge Leaders Capital. And Steve has done factor analysis, uses factor analysis. He's somewhat quantitative in his orientation and has defined innovation as a factor. And according to his quintile spread for the R&D to sales ratio factor, he believes that the major underperformance is done. And if you look at the PE to growth ratio of the innovation index that he has derived, it is now selling at a 31% discount to the PE to growth, or the PEG ratio, of the S&P 500. And he noted that this innovation kind of strategy bottomed in May, whereas the broader-based indices, which we would submit are being disrupted, they hit new lows just in the last 10 days. So stay tuned for more discussions about innovation and where the world is going and how innovation is solving problems. So with that, I guess I'd like to reassure you that it feels like we're moving towards a cathartic moment. And, I think that the 75 basis point increase, if that's what the Fed is going to do, is going to result in some financial signals that the Fed will have to pay attention to. Maybe it didn't have to pay attention to the guilt trip, but it should, because it is the reason it should have the guilt trip, that near Lehman event happened in the UK. And so it is darkest before the dawn. We think the pivot is close in nothing else but rhetoric in the short term. And we certainly hope that the Fed gets away from this need for unanimity and a united front, when really we have all of these Fed members and presidents for a reason to debate. And we feel that debate is being stifled. The debate should be driven by data, but it cannot be. If it were, they would not be unanimous in their thinking right now. So let's hope there are some dissenters, and let's hope there's some rhetoric change. There are all kinds of reasons out there, data-driven reasons. And so we hope the Fed is paying more attention to all of the data instead of just a selected few pieces of lagging indicators.